What's going on? What's going on? Good afternoon, good morning, good evening, whatever time it is, wherever you are. Hey, give me 1 second. Sound is good, hopefully. I'm just going to try to put the chat on the screen. 1 second. Window capture. Get rid of that. I know you guys are looking at the back of my head right now. I apologize. Just give me a minute. Window capture. Cool. There we go. Let's just set this. Clean it up a little bit. Okay, I think that does it. I think we're good to go. All right. Yeah, the camera obviously is on that side, so I should move this chat. Hold on 1 sec. And we'll move the chat over here. All right. Now you guys can see me. I have this screen dedicated to the beats and the sound control, and yes. So what's going on, guys? How is everybody doing? We'll start it up in a minute or two. Give everyone a chance to enter, get situated. What's going on, Nate? What's going on, Isaac? Restless, Shifties, Enter, Philip, Neil, Jupiter, Jupiter Sock, Josh Andrews. What's up, buddy? And Alex. Oh shit! Hold on 1 second. I forgot my food. All right. Apologies. I had just cut up some melon, and I plan on snacking on that during the stream. Hopefully, I do it in a way that is mannerly and I don't sound disgusting, because we know that this selection of food can make some noise. It's pretty wet. Okay. Horses are good. Horses are good. Wife is really happy because I'll go into it in a second. Sounds good, right? Before we get into me going into a tangent, make sure that the sound is good. To welcome everybody, if you're new to the chat, my name is Ryan, also known as Cantor & Clark, and I'm one of the founders of BlockRoots. Eye contact. Yes. I do have to move this camera. So I just got like the bar set up. And yeah, so I haven't done anything yet with lowering it and setting it in sort of the right spot. I know eye contact is key, but Josh, you know I don't really care too much for what maybe you're supposed to do as a perfect streamer. That's not my goal. I know that it probably doesn't help, but I really could give a shit. Plus, if I made eye contact with you the whole time, it might get kind of awkward. All right, sound is good. Nah, I'm just messing around. Like I said, right now things are not as organized as they will be, and ultimately I'm going to have the camera. Since I put the new monitors in, I'm going to have the camera on this sort of swing arm. There's like a space between the two top monitors and the bottom monitor. And what I want to do is have the camera right there. Oh yeah, okay, eye contact. Okay, I got it. All right. Anyway, all right. So how's everybody doing? Welcome to the stream. We're gonna go over BTC, briefly touch on NFTs. It's not my area of competence. Definitely hasn't been my forte to participate in that market. I don't really care. I don't really feel like I missed out. I have the things that I'm good at, and I double down on those. Sometimes I even have trouble with those. So I really don't feel too bad when I miss out on where there's a ton of action and activity, because it's that's how you could feel about the entire market at times, right? If you start sort of, I guess, trying to, or maybe setting goals to get as involved in everything as you possibly can, it's just unrealistic, right? You're going to be missing things. It's difficult when you miss like an entire sector-wide or sort of secular shift towards something. But for me, it's just, there's not really a whole lot of cross-pollination, or there's not a whole lot of parallels between trading, BTC, sometimes alts, and then NFTs. It's a super illiquid market. It's kind of like, it's sort of like trading before they had decimalization in equities. Just like fractions, like it's super illiquid. Like you'll see things just, someone acquires something for very quickly, something for like, let's say 1 ETH, and then, it's immediately sold for 2 ETH. Or in these cases, it's immediately sold for like 10 times the amount. So it's not like there's an audiobook. All right, so before I get into all that, the formalities, right? So my name is Ryan, also known as Cantor & Clark. I'm one of the co-founders of BlockRoots with my partner, Josh Rager. We have BlockRoots YouTube. We have BlockRoots, the order flow and market profile course. You can find that at www.blockroots.com. We're both traders, been trading for probably combined now, both of us, over 20 years. What else? None of this is to be taken as financial advice. This is strictly for entertainment purposes only. We want to thank, obviously, our partners, Phemex.trade. You're under no obligation to use the exchange if you are going to be watching these streams. Obviously, we know there's a ton of exchanges. There's a ton of exchange fragmentation in the crypto market. Use what you're familiar with, but if you do use a link below and do check it out, within the next like 6 days, I think it ends, but they're still offering a 2K sign-up bonus. So Phemex.trade is the link. We're not just sharing a ref link. We've been partners with the exchange for the last 2 years. So some of the pairs, some of the things that they've integrated are, essentially me and Josh working with the team to try to bring these things to market and to give the users of the exchange a good experience and to bring out the products that people want to trade. Obviously, you can't get everything done. So while, people do give input, I will go right back to the team and we'll fix things, modify things. Obviously there's an end to that at some point. Like I can't just sort of make everybody happy. Ideally, but that's sort of unrealistic. But anyway, our partners. What else? I think that really does it as far as the formalities go. There's a couple other links below also that we do have on the YouTube page, and they will give you access to some type of bonus, some type of reduced fee structure, yada, yada, yada. Okay, we're all familiar with how that works now. But again, use the products and the exchanges that you think are the best, right? That you're comfortable using, okay? That's what I do. I'm constantly changing things. There's a ton of different order flow platforms that are always coming out, or, sort of what I would refer to in this market as gadgets and gizmos. You don't have this in traditional markets. So it's exciting to test new things out, and the same thing works for exchanges. Okay, so I think I said hi to everybody in the chat. What chair is this? It's funny you should ask that, because I had a Herman Miller. Okay, not Herman Miller. That's, am I thinking of the right name of the chair? Herman Miller. Yes, okay, so I had a Herman Miller. For a second, I'm thinking, I'm thinking Harman Kardon, which is the sound company for my car. Or the speaker. Yeah, Harman Kardon makes BMW speakers. Anyway, I digress. Herman Miller, right? I originally had a Herman Miller. I switched out. I got this fucking gaming chair, okay? I thought this gaming chair would actually be more comfortable because of how much further it went up, okay? It originally comes with like this pillow, and it's not as comfortable as a Herman Miller, all right? So I am going back to that, and I ordered a new one, okay? Because I got rid of my old one, ordered a new one, and I ordered it like a month ago, all right? And I reached out to them. It's a company that sells chairs. It's not, I didn't buy it directly from them because it was a company that sells chairs. It was like half the price. So I was like, why the fuck would I pay another $1,500 for this chair when I could get it for half the price? All right, somewhere around half the price. So I reached out to them, and they were like, oh, well, you know, with everything that's going on, there are delays. So expect your chair in no later than the middle of September. So this is a gaming chair. I don't know exactly what type of gaming chair this is, but it is comfortable. Yeah, going back to Herman Miller. All right, so yeah, my dad is doing better. Thank you for asking. Thank you for asking. My pin tweet, you know, I'm just going to run through the chat real quick, and then we'll look at the charts. My pin tweet, I said that so long ago. It's silly, right? For one, making long-term predictions, you might as well just flip a coin, right? It's easier to predict where price is going to be 5 seconds from now than it is 5 months from now. Okay, there's obviously a ton of variables that can fit in between now and 5 months from now, or any kind of longer term view. And I would say it's weird because near term activity is easier to predict, and then almost you want to say that really far out activity is easier to predict, or sort of extrapolate from current information, current trends out far into the future. But it's sort of the area in the middle that is difficult to get a hand on, a really accurate hand on. I know that might sound weird, but what I'm talking about with predicting really far out, it's kind of like expecting that secular trends will continue, and, you know, markets will continue to trend up, you know, positive drift, yada, 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 which tends to apply more to things like the equity indices, you know, if we're talking about NASDAQ, talking about the S&P, but those have internals. So yeah, the pin tweet, you know, after a big sell-off like we had, you're going to expect some type of corrective behavior to the upside, even if it was going to persist to the downside, right? So you have reversion to the mean. The way that I see it now, we spent a really long time moving sideways, breaking out of that range before correcting back up to this level. So it's anyone's guess, right? I said I don't think we're going to make a new all-time high before 2022, right? So before the end of this year. But I said that 2 months ago now. I feel like it's 2 months now. I put that pin tweet up, but just to give you an idea, long predictions are really silly, and no good trader is going to hang on to that, right? It's the idea of, do you want to be right or do you want to make money? Okay, so when things change, you have to adapt, obviously. Like, there are people that will continuously hang on to losing positions, you know, hang on to, you know, beliefs when they're, you know, clearly invalidated, but that's the reason why you should have some sort of invalidation or some sort of basis for your thesis. I'm not, if that works out to be the case, cool. You know, I'm sure certain people are going to say like, oh, wow, that was amazing. Like, how did you see that coming? But, you know, if BTC makes an all-time high in the next 2-3 months, I'm sure people are going to come out of the woodwork like, you pinned tweet. It doesn't even matter. Like, it's so silly. All right. Yeah, the horses are all good. I saw someone asked about that. One of our guys, so Clark specifically, has had trailer trouble for the last couple months and last year, and so finally we had a trainer working with him, and he's been good on the trailer. But I spent 20 minutes talking in the beginning. I don't want to take too much of your time. All right, so let's switch it up. I have a few different screens. Let's make sure the sound works on all of them. Sound. Okay, so we're good. All right, so let's take a look at BTC. Really quickly, with everything that's going on, I know you guys can't see me right now, but I don't think you have to see me, right? We'll pop me in there. One sec, video capture. There we go. What's going on? Okay, no, that's way too big. All right, fuck it, let's not mess around too much, because if we mess around too much, I'll ruin the stream. So let me just get rid of this real quick. Where is that video capture device? Hold on. Sorry about that, guys. All right. Okie dokie. There we go. Put that back. So NFTs, I've been kind of outspoken at times about NFTs. It is, tremendously transformative. All right. It's going to transform the art market. It is something that's positive in the long run, but I don't think that we're seeing something that is a sort of this time is truly different moment in terms of what is taking place right now in the NFT market is sort of bubbly type of frothy behavior. Sure, this will really benefit people who are truly, looking to get involved in the art market, truly benefit from being an artist or someone who is involved in the art market. But currently right now what we're seeing, I think, is definitely is evidence mostly of short-term speculators in the market. It's not like suddenly overnight, the market has become, it's like, wow, crypto Twitter, who would have known that it's full of people that are really so interested in art and are, ex-art history majors, okay? So I think what is obvious that takes place in this market is it's like the next shiny object, right? So when DeFi was really taking off in DeFi summer, everyone is a decentralized finance aficionado, right? They're familiar with the current plumbing of the current financial system, how DeFi will benefit. This is the future. Spending all their time researching, learning as much as possible about how this is going to change the world. Everyone is suddenly, they put on their LinkedIn that they are, they're an expert in decentralized finance. All right. One chain comes out, Uniswap comes out, everyone is on Uniswap. The next thing that comes out, SushiSwap, everyone is talking about how SushiSwap is going to transform the world. This is just like CT has this kind of behavior, right? I think it's part of it is youth, okay? Super optimistic about the future, what crypto is bringing, how crypto is going to change the world, but the expectations are that it's going to just occur almost right after we realize the benefits of it, right? When really what happens is it's the Gartner hype cycle. I've said this many times before. It happened in crypto in 2017, 2016. There's long-term promise for these things, but there's a lot to be sorted out. The initial people that come into the market, they're short-term speculators. We know that it's going to sort of have the same kind of distribution that you would find in any system, especially if we talk specifically about art, where Price's law, there's evidence of Price's law, which is similar to a Pareto distribution. But Price's law, I think what you can say with Price's law is, and someone has to look this up, de sola price. I think that the square root of the sum of a given amount of, let's say, artists will take, I think, 90% of, or will accrue 90% of the interest, or in this case, accrue 90% of the capital. So if we look at, let's say 100 artists, right? The Price's law distribution for that would be that 10 out of 100 will, sort of, I would say, what is it? Is it 10? I mean, we have to look this up. It's how the, one sec. Similar to Pareto distribution, but it's a little bit different. I don't want to fuck it up in Price's law. All right. 50% of the work is done by the square root of the total number of people that participate in the work. Okay, so the idea is it's the amount of money that we're seeing right now is going to sort of filter to the projects and products that are the most valuable, I'm fucking completely having diarrhea of the mouth right now. Excuse me. Hold on. Most of the money is going to accrue to a small amount of projects, right? A small amount of pieces of art. Okay. So excuse me, that took a second to get out, but Jesus Christ, I should have just looked it up before I tried to quote it off of memory, which is, I haven't. It's not like I think about Price's law every day. But same kind of idea of Pareto distribution, right? So a lot of short-term speculators in the market. The one benefit is, that it's not the same as a futures market, right? It's not the same as derivativization, creating derivatives of current spot assets. Eat some melon. Tell me about it. it's not the same because there is actually value created. This is a net positive thing, all right, in this little economy. Okay, so what I mean by that is when you create a derivative, when you long a BTC future, that's borrowed, right? That's on margin. You're using leverage. Okay, you could be a forced seller, right? Or if you're short, you could be a forced buyer. When you create value, so in the case of the NFT market, let's say that I'm an artist and I come out with an incredible painting, and the market values it at, let's say, 100 ETH. All right, I sell that painting to somebody for 100 ETH. I get 100 ETH, and they get a painting that the market values at 100 ETH. All right, so it's value creation in that sense. Now the problem is, again, we can't escape the fact that this kind of is a very short-term phenomena. Yes, over time it will become obviously something that is, I guess, a bit more reflective or representative of the true fundamentals, right? But right now, I think that I think we're very well, not at the end of it, but we're still in sort of a hype cycle. Okay, had to get that out. Excuse me for the Price's Law part fudge. The solar price, just look it up. Okay, we're all familiar with the Pareto law, obviously, 80-20 rule. If you're not, God knows I'll probably fuck that one up too, right? But that's what Google's for. No, the Pareto law is a 20% of the 80% of the output, 80% of the value accrued to 20% of the producers in this case, we would say, if we were talking about the art market. All right. Anyway, eating some melon. Okay, so looking at BTC, we're at weekly resistance right now, right? At weekly resistance, this weekly level we're at 49,000. It's a daily level as well. So we're looking at the underside of this structure. 49,000, just 49,000, 50K flat is your level. If we break above 50K, I think that's sort of green light to everybody. This technically is, and I've gone over this before, this is a great area to sell, right? From a risk to reward standpoint, just to put this very simply, if you're looking at creating a short or a long, what is more attractive, right? We say that 50K is the sort of invalidation for any kind of short thesis, and I'm saying that right now because 50K is the green light for the long. So that's a really close area that we could define any kind of short or any kind of hedge, or even just getting out of our spot positions and sort of waiting to reevaluate upon reclaiming the level. It's very close. Okay, the idea being, let's say you're not a short, you're not shorting, you're not hedging, but you're selling your spot, and you're like, okay, where would I want to get re-involved and where would I feel comfortable? 50K, above 50K, I think at this point after this kind of roll is that level, all right? Whereas, and the reward potentially for any kind of downside movement is much greater in this case. We're much closer to resistance than we are to support. Now, you could look, obviously, we could look at, the more local daily level. This is, what level is this right here? This is, hold on one sec, let's get the crosshair. The low of this is right around 46,135. This is 46.7. This daily swing low, we've had a bearish engulfing candle, almost a bullish engulfing candle, and now we're back at, excuse me, sorry, I didn't mean to do that. Now we're back at this low. We're hanging out around down here. It doesn't look like the kind of response you would want to see if you were going to say, hey, this is a good support to sort of long. Not to say it hasn't done this before where it's just ripped up from here, but if we're just looking at this, right, from a seller standpoint, it's a better area to sell than it is to, in my opinion, buy. You're buying at resistance. You're buying under the assumption that you're buying a resistance that's going to break, right, in advance, okay? Now, if we were favoring the top side of this, all right, which is sort of a rising triangle wedge structure ultimately would look like, that would be consolidating at resistance. But as it happens right now, we're spending more time at the low, right? So needless to say, it's not the most bullish looking structure. And not for nothing, all right, it's not like we've had any kind of major probe of any of these significant lows below us. Okay, so the most obvious one being right around 44, 45. So we have uninterrupted around 43, 44. uninterrupted around 44.45, uninterrupted around 43. So just to point out, there's a transition upward and we haven't returned back to any of these levels. So normally the market, it doesn't allow for trailing stops to get off for this amount of time without some kind of test. And what I mean by that, I'm just saying, like, all right, so say you're a trend follower and the entire way up you've been, graced by the fact that you haven't had to worry about any of your stops being hit while you're pulling them up. Okay, so you've been sort of benefited by clean upward structure in this case. And even in this downtrend move right here, let's say that you were longing off of these lows, well, you got away with it, right? Now, hopefully you had some better judgment and you weren't holding all the way back down, but the idea is, let's say you were on vacation, you had that long there, and your stop was, structural off these lows, 1 ATR, whatever you're using, you got away with that. Okay, so uninterrupted, the problem with that is obvious. You have all these areas that the eye draws to right away for stops, all right? And the problem with that is that this whole area becomes likely filled with downside liquidity. And I say downside liquidity, it might sound funny. It's just we have a ton of long stops, as you can imagine. And because this is uninterrupted, it's likely that if you trigger through one area, you'll cascade into the next. And when they're within close proximity, you could expect that more often than not, it'll lead to a pretty violent move, right? And it's difficult to stop that because it's sort of like dominoes. What I would say though is that this low right here, sorry, I had to chew at some point. I wouldn't think that if we break this low, that this low is going to break and then immediately cascade. I think that what you do have is, since you do have some distance between sort of our, what is our 47 area and 44.5 area, I think that if we're breaking down from here, that this is the test that we should look for, right? At least initially off the bat. But still, from a risk-reward standpoint, we're closer to resistance than we are to support. Okay, it's kind of, you could say it's a 1-for-1, but is that an attractive trade to really take, from the long side? I don't really necessarily think so. Okay, so at resistance, again, arguably a fantastic level to sell. If you were bearish on this entire structure, this was a gift, right? If you're still bearish through this move up, and you're saying, hey, sort of wipe your hands, I want to get out of this market. If I could get anything, if I could get any kind of bounce, right? Let's say that you held and you had sort of the wherewithal to understand that, after a 50% drawdown, the market's probably going to bounce. Ideally, you're looking at selling the 382. You'd be thankful to get a 50% retracement of this dump. And now, we're sort of in that sweet spot. Now, do sellers often get a long amount of time, right? That's another thing you could start thinking of. Okay, so would this, if this was bearish, wouldn't have moved a lot faster? So I think that the entire structure is bullish, okay? But I think in the short term, it's bearish. Okay, so that, just to clarify, I think that it's clear that the market is not still moving with the same sort of kinetic energy to the downside, or that we have the potential to do that where we sit right now. A lot of the leverage is wiped out over here. This is, the beginnings of another majorly spot-driven move. We haven't really seen the futures market get very overheated. So I do think there is potential for a downside move, but I'm not really necessarily worried of it picking up much speed. I think that these levels ahead of us will be, or should act as, some type of substantial, substantial support. Let me take a sip of my pineapple water. Okay, so closer to resistance than we are to support. I do think that the supports, for me at least, I would look to get involved on the long side down here. If we lose, 45, yeah, we're probably looking back down at this range high. So 44.45, we're back down here, most likely. So, what we're looking at is, I think, probably 40.41, okay? It would make sense at that point. We haven't, if the market starts picking up momentum to the downside, the further we get away from what is such an obvious level to sell, the more panic we might have, right? Where the market is looking at what is now 5 weeks of sustained upside movement. You look at the monthly candle, you could start sort of hearing what will likely be some pretty loud bears at that point. So, breaking 45, probably coming back down to test the top side of this structure. Like I said previously, I would expect that this area might be kind of a loose shoreline, right? So not exactly a laser-like level. So you could see some violation into the top side of this range. I wouldn't really be worried until we were starting to sort of maybe fall back below mid-range of that previous structure. So if I was looking at this and just putting on sort of like a fixed range profile, mid-range is around 35, 36. Point of control is around 34, 200. I definitely wouldn't want to come back down there, but the point is, if we look at this entire structure and let me just get rid of this, and we look at mid-range, would it be out of the question for this to come all the way down here and still be bullish? I could see it still being bullish, obviously. Excuse me. I mean, I definitely, I don't want to sound like I have some kind of whisper of a doubt at this point. I think that the low is in. All right, so I don't think we have to worry about lower prices at this point. I think that we're expecting maybe, what we might be differing on for me is the level of accumulation we have before the next all-time high. But I don't think that we're going to have to worry about breaking back below 30. Things could change. If we start breaking below 35, like I'm going to be changing my tune, and I'm going to be obviously bearish at that point. But it's path dependent. Okay. So BTC above 50 for me, sort of slam on the gas pedal, try to get as long as possible with futures and spot. If we lose 45, I'll be looking to around 40, 41. But yeah, that's the high time frame. Let's look at ETH really quickly. So, and actually before we change over to ETH, another thing to focus on is that we haven't really seen anything nuts in terms of funding. So in terms of positioning, it's not like it's only been sort of the last week that we've seen any kind of sign of a spot discount, right? So what we've had the entire move up is, for the most part, is we've had spot leading, right? Pretty neutral, spot leading, maybe futures trading, evenly with spot, but we haven't really seen a case up until the last week where futures were trading at, what we've seen in the last week was sometimes $100 to, it's more along the lines of like 50 to 75, honestly. Bybit will be trading at like a $50 to $75 premium. FTX Perp will be trading at like a $50 to $75 premium to the major spot markets. All right. Now, that's mainly to Coinbase. With FTX, a perp might get anywhere from like 30 to 40 bucks. But when it comes to Bybit, that's a good, I think, exchange to look toward to see sort of the dumb activity in the market, right? The activity that should make our sort of alarm bells start ringing, okay? Now, today we're seeing a lot of flip-flopping, but what we might need to take into consideration is that in the last couple of days, we've had the Bybit World Series of Trading taking place, okay? So the WSOT, I think that's what it stands for, right? It's the major trading competition. So as you can imagine, there's a lot of sort of, I would say, a lot of activity that we normally wouldn't see on that exchange. So I'm not necessarily sure if we should tune too much into that as a signal. Some people might say that, and this is where things get slippery, right? The more information you take in, the more difficult it is to arrive at decisions, because you could start thinking, well, what if, I heard someone say, well, all these traders now are taking part in a trading competition. It's probably the smarter traders. I don't think it's necessarily the case. If anyone is trading in a trading competition, I've traded in trading competitions before. I will start by being conservative and the trader that I would normally be. I'll get up a strong record of results for a couple days. Like for example, the Phemex competition, I was up like 65% in the first 2 days. And then it's like you get the itch. You're like, oh, well, everyone is up fucking 405%. Let me swing for the fences. And then you start getting lazy because it's like, I'm playing with, $500. Let me just punt this for the team. And as you can imagine, I think traders, for one, have difficult focusing without competing. You are competing by trading already. So when you're pressured to compete in something you're already competing, I don't think it brings out the kind of behavior that is worth following. So I think we're seeing choppy behavior on Bybit because of that, and we're getting sort of this flip-flopping in funding rates. So we'll see Bybit go from, it looks predicted to sort of 10 basis points, and then it's all the way back to neutral. And then it's at 8 basis points, and it's all the way back to neutral. Whereas normally we might see, you know, if we're looking at, you know, higher time frame resistance like we are right now, and we're looking for signs of froth to fade, right, where we're saying, okay, what would make me want to sell a resistance like this more than hold? Well, I'd be more prone to selling this level if I would see consistent increase in funding with no results. Okay, so normally Bybit would be going from like 1 basis point to 5 basis points to 8 basis points to 12 basis points. There wouldn't be a lot of reset. So it's confusing, right? There's never a clear answer. Okay, some people, like, they think that by having, you know, they'll come to me, for example, like, oh, you have that, you pay attention to all these details, like clearly you have to have a better answer than I do, because I just know supply and demand for now. Well, sometimes it's obviously, sometimes it's not beneficial because you start equivocating more. But, you know, that's what we're seeing. It's just something worth considering if you're watching the funding and you normally pay attention to funding like myself, and you're seeing it sort of flip-flopping. The fuck is flip-flopping? Flip-flopping, right? That is taking place on the exchange. Okay, so one sec. So now that we've talked about that, let's look at ETH. So ETH, very obvious level, right? This daily level right here, we have 3 hours left. I'm still long ETH, okay? Right now, you can't see me, but I have my hands clasped in prayer. I would love to see this daily close this way, okay? The problem with structures like this, and this is the problem in crypto, is that they're super exploitable if you're any kind of larger player, right? You know you're going to get a ton of liquidity. If you wanted to sell, this is your area to sell ETH, okay? The most obvious level, right, becomes a breakout level, a level that's been defended for a really, really long time. You know, we call it a major contextual level, a structure defining level, inflection point. There's a ton of different ways you could talk about this level, right? You hear some people, you know, it's a key inflection point. I say key contextual level, you know, major supply and demand zone, whatever. It's where things really change. It's where a ton of participation comes into the market. Now, with a major level like this, you'll see that confidence is going to be really solidified if we get a daily close through it, because obviously we haven't had a case like that yet. What happens is people position in advance after the break, like a minute into the day, right? You get a move above this level and suddenly it's a breakout. You know, that's dangerous because you're setting up for sometimes, a lot of the times, a fake out. You could almost look back very quickly and see historically that major sort of patterns like this that stand out, they've been punished initially. So if we look back at, you know, the only one that's really worked out is back here, right? Otherwise, if we look at what stands out as kind of a very obvious level, let me zoom out, hold on one sec. You know, I'm thinking that there's actually a better sample that would confirm what I just said, but it's kind of, you know, it's 50-50 almost. But that's a gamble, right? You know, sort of key level back here, this high, you know, market makes a move to the upside. It looks like it's the next period of continuation. You know, same with this break at this high, the day after, right? So you have a close through that level. You know, same as this break for sort of these highs. You know, what looks clean and obvious is often punished, all right? So that's just one thing that I would sort of, I don't want to say anticipate because I'm still long, right? I sound like an idiot. But just to be weary of, right? Especially if you're earlier within the day. So I guess a better way to phrase this would be, if you're looking at a structure like this and you're 5 minutes into this daily candle, you know, you really have to ask yourself what you're doing if you're getting really bullish on the first 5-minute test above that level. So we've had a significant move above the level. So, you know, if we're looking at today, the start of today, right back here, we've had a significant move above that level. A great amount of volume has come into the market, right? The market is holding that level, okay? But, you know, it very well could be that we see a large spill if we start falling back within that level. So if we start falling back below that high, you know, the daily high, instead of me referring to it as that level, as if you guys know what I'm talking about specifically, just clip this on So it's perfectly on the last high. So we're looking at right around 33.26, right? All of this activity above, and when I go to the profile in a sec, you'll see all of this activity above. You could imagine that if we're starting to fall back below that, we could very well see a pretty decent sized puke, because you do have traders right now that are getting positioned in advance of the daily close. So that's always something to consider, right? The idea is that a lot of the times when we do have a structure like this, right, where it's very obviously defined, a lot of crypto traders, they're breakout traders, right? And we see how often breakouts turn to fake outs. All right, so something as obvious as this, very clean level, we'll see that even if this is a larger continuation pattern, very rarely does it occur that the first day leads to, a move that is just left behind, right? There's only been a few times where that's happened, where a level has just been completely left behind and we haven't come back to revisit it until like a week or two later. More often than not, you get a move above the level. It gets a lot of people sort of flat on their feet, right? I guess a better way to put it is flat-footed. So they're positioned here. Once the market starts ticking back below them, they puke their positions. What happens is the market retests this level back within the structure. Suddenly everyone is bearish and then begins to rip upward after that. So you get sort of that throwback behavior. And one thing that you could look at for this is, when it comes to market structure, this is where major change in market structure, I would say that this is, it's a significant level. We're looking at sort of 1, 2, 3 weeks, it's a fourth week in the making, but 3 weeks below that level, all right, which is this prior weekly low at the all-time high. So it's very obvious level, right? Stands out, okay? A break of that level, what I ultimately would want to be focusing on is where most of the volume has come in post-break, right? So all the new activity that came in, you definitely want to maintain that activity. So if we look at, something like a profile, for example, we're creating the point of control right now. So I don't want to say that, this level right here is the level any more than where we are right here. But you could bet that the lower that we trade below where most of this volume came in. So sort of, if you want to imagine just this fat area, if we start trading back below these lows, for example, your longs, which if you look at the top side of the structure where most of the volume is, your longs are clearly in a worse off position from here all the way to here. So shorts are in a better position. So you get sort of, I guess I would say, nervous behavior once you start pushing against those longs. How strong do you think they're going to be about holding their newly built positions? And another thing you could look at is, for example, we could look at, say, today is the 31st. That break of that level has occurred. The break of that key daily level is at the low of my green box. So we're looking at 11.12. We'll put on an anchored VWAP from that level. So the month, 8/31. We'll just say the 12th hour. All right, so there's your anchored VWAP, right? So again, like I said, it's going to match up with the point of control. So best case scenario for me, for anyone who's in ETH right now, at least in the short term, if you're a newer long, is that price continues to maintain where this volume is coming in. So where the risk has been put on. Again, we're kind of noisy around that area right now, but if we're falling back below, something like 33.70, then it becomes a little bit more hairy, right? Then it's a little bit more likely that any of these sort of newer, weaker-handed positions would likely puke, okay, and reevaluate. So you always have to imagine, you always have to ask yourself at these levels, who is buying? Breakout traders, a lot of the times they're short-term participants that come into the market at that point. If they haven't accumulated positions for some time, if you see a sort of big flurry of volume come in the market after a level like that, yes, you want to see that to confirm new activity, sort of new participation behind the trend. But once you start falling below that activity, obviously you start getting into trouble. One thing that doesn't help our situation is that BTC is a little bit heavier than ETH right now, right? If you look at BTC, if we just look at the last couple days, we've had value migration lower. And just to switch this real quick, go go to top left. When I say value migration, I'm talking about, it's a little bit more obvious on XO than on TradingView's profile. The value area over time moving down. All right. Into corrections, we've seen this. It's a briefly value is migrating lower. Ultimately, what we would want to see is for us to start retaking where most of the activity is developing today. But, that point of control right now is right around 47, 400, 47, 370. So it would make us a lot more confident, I think, if we, it would make me more confident if BTC started trading back above even something like where a bulk of today's activity came in. So it's showing that, value is being determined lower. Sellers are in a bit more control. Buyers are not really able to, I guess, enforce themselves, at least right now, which is, not a good look when you're in any other pair. So, for ETH, for example, it's definitely, it definitely makes it tougher to sort of maintain stronger hands the way ETH is sitting in sort of a precarious position when BTC is, looking the way it is. At least on the lower time frames, right? Again, we said on the higher time frames, it's looking like it's not maybe the most justifiable long. On the low time frames, we're back at this prior swing low from the 26th, 27th. I would kind of anticipate that even if this was to resolve upward, that we do see some sort of probe of that swing low, right? So, I mean, we have, for example, if we look yesterday, we have single prints at the low, right? So this is just a kind of a more of a sign to weakness. We have these single prints at the low. So ultimately, these sort of buying tails should indicate that the other side of the market, in this case, buyers, are aggressive, right? That the market was unable to spend a lot of time down here. So that's another thing about value migrating lower and volume migrating lower, is that now the market is becoming more comfortable at these lower prices, which is not what you want to see, right? More comfortable at the lower prices, right? Things are getting a little bit more slippery to the downside, a little bit harder to move to the upside. The structure just looks kind of rolly, right? Does anyone have any questions right now? I mean, on the high time frame, a few other details. 20 period moving average. One sec. Yeah, nasty candle. That's right. I don't think that ETH is going to get away with being up here the way BTC is. We'll see. I feel like it's easier for ETH to drag BTC up when we're coming off a support, right? Than anticipating that ETH is going to drag BTC through resistance. It's tough to sort of, I don't know, hold those two thoughts together. Another thing that we're looking at, just at least a short-term measure of control. This 20 period moving average on the daily, a lot of times we'll see in strong trends, price will maintain this as some sort of dynamic support. It's a pretty popular area for BTC, right? It respects this level historically, and when we've lost it, it's acted as dynamic resistance, and we've seen price takes a little bit of time to recover it. So we're adding all of these details together and trying to come up with sort of a thesis. It looks like I might have to close this ETH long out. It looks like it's a better idea to do that, one sec, than it is to hang on to this guy. But I'm going to hang on to it because we are still above ETH's level with 3 hours into the close. This could change in 5 seconds, right? BTC could nuke. We could fall back below that daily level, and I could change my mind then. I would rather just stick to one of the reasons why I added to this in the first place than invalidate it sort of prematurely. We know how noisy the market is right now, and it's really easy to get chopped up rather than stick to sort of firm criteria to make decisions around. And even if that means that you take a loss because of it. So any questions, guys? Let me just pull the chat up. I don't think we're at a position where we're seeing a disconnect between BTC and ETH, where ETH is going to suddenly start. What's the term for that? I don't know why it's lost to me right now. Crap. What's the term I'm looking for, guys? Not decorrelation. Can't think of it right now. I mean, are we gonna take today's lows and recover from here? I don't know. I mean, if I was looking for a long on BTC in the short term, decoupling, thank you. Mind readers. You guys are brilliant. If I was looking for a long for BTC in the short term here, I would ultimately want to see, either it comes in the form of us balancing out over the next day, so day and a half, right? Forming some type of base. Okay, so we see volume migrating lower into this structure. If we could keep most of that activity below us and start taking, retaking something like today's value area high. So if we're looking at maybe 2 inside days here, let's say tomorrow we open up, maybe we make an effort towards what ultimately is today's low, reclaim, a better way to phrase this without drawing it first. Let's say that we close this out, right? Below today's value. We have some sort of a Dalton setup. So let's say we close, take yesterday's low, which is today's, but I'm talking about if we close, right? If we reclaim today's value, I'd probably look for a long from around 46.8, up to probably this sticky point, swing high right here, point of control right around 47.3. Start to get even more bullish though if we're able to completely reclaim today's value area, right? So imagine, we haven't moved down, a bit more balanced out. We have 2 days of sort of soak at these lows. When I say soak, I just mean, the activity that's coming into the market, see a good amount of that distribution at these lows, price is able to recover it. That would be good, right? At that point, maybe we're looking at a transition from, 47.6 back up to these highs, back up to the weekly open around 48.8, right? 9.4 million market sell Binance perp. Well, if that was Binance spot, I'd be a bit more concerned than breakout sell. I mean, it's a premature breakdown sell. Kind of silly. Where did you see that? Hold on one sec. Did that just roll through the tape? Binance perp, huh? Oh, yeah, there we go. So for everyone who's curious, he's talking about right here. I mean, that's kind of ugly. It's starting to roll in again in size, but that's futures. So right now what I would want to see, if I'm bullish, where's ETH? ETH's starting to lose some ground. What I would want to see is, selling in futures is fine. What I would be weary of is if we start to see it pick up in the spot market. So, selling in futures, no pickup in spot, no interest in activity in spot, meaning, spot sellers are not really interested in selling at these lows. Then I would expect that Binance seller for a little bit of pressure to be put on them. So price, that came in around, let's just look at Binance's footprint real quick. What level did that come in at? Yeah, look at that large increase in open interest. That one sell had to come in right below 47. So I guess the rationale was selling the round number break, but I don't know. If spot sold, that's one thing, but someone opening up that amount of firepower pre-break, it just seems like if I was, if I had a little bit more gunpowder than them, I'd try to be pushing them out. But we'll see. Some more sells coming through. A little slipperiness now. I mean, you have a little bit of pickup and take speed, but none in spot. So if we start to see the speed pick up and prices just hanging out, I would expect this to just pop up. You know, it's kind of like if we're looking at the wheels right now and they start spinning and the car's not going anywhere, then, you know, the seller's going to burn their engine out. So, yeah. So, I mean, we'll go back to, I want to look at Bybit. 6.2 million into that low also. So it's you know, for these round numbers, like I said, they become very important. Okay, so what you'll see on sort of a tick chart, if you looked at a profile of, if I could pull up price statistics for BTC for the last day, right? And what you'll actually see is that the round numbers, so for example, 47.2, 47,000, you know, 47.5, 48, you'll see that there'll be, you know, almost, if we're looking at, we'll go back to the other screen. If we're looking at this profile, right, and not just a volume profile, which is going to show us big clumps, but if we were to look at like really atomized, really zoomed in, you would see that at sort of 48.8 is a big pickup in activity compared to everything else. 47, you know, 5, big pickup in activity, and not tremendous, but what you see is that the large round numbers, those key psychological levels, which tend to be ones where it's, you know, if we're in the 40s right now, we're talking about 47, 40, you know, 50K, 45, talking about 3 digits, 3 zeros, right? Last 3 digits. Obviously, more important numbers are the ones where it's like 40K, 50,000, you know, 20,000 was a very significant level. These are high participation zones, and you'll just see more activity come in there. So it makes sense that if we're losing that to the downside right now, that someone is saying, okay, we lose 47, you know, we're going down Schitt's Creek. Although, again, we're still hanging above today's lows. So we could just be putting in, we could put in the daily low after taking the lows and end up, auctioning back within the structure. So it's a little premature. So think about how you would feel if you were that Binance seller right now. You know, you sold 47, you're at 46.95, you're feeling okay, right? You are, you know, you're sitting pretty. You paid if you sold that at market, you know, if you don't have some kind of special fee structure with the exchange and you're paying 7 basis points, you know, you're talking about $15,000 in fees for that. No, $7,500 in fees just to open that trade. You know, with almost no slippage, right? So, so yeah, I think that this is a prime squeeze possibility. One sec, let me just, oh, what's going on with the screen? What is that? Center, top left, hold on. I'll have to fix that. Let me just, one sec, guys. That's kind of weird looking. OBS just, oh wait, no, never mind. Okay. All right. One sec. Okay. Just going back to that. One sec. Let me pull it up again. So yeah, a good kind of trap setup is a significant low going. So say, for example, you know, I would be more apt to look, not necessarily, we took the daily open, right? But you know, we're trading back below the daily open. So that is a good trap area. So let's just rationalize why that is really quick, or explain. If we're looking at this daily candle, this is suddenly becoming a red daily candle, right? When we're on the opposite side of the daily open. So, you know, obviously some gunpowder for sellers in that case. when you did the, oh yeah, it did. Yeah, if I don't click on the OBS screen and then like anchor the mouse somewhere else, like click off of it. If I press that hotkey, it changes. If I press, I don't know what key it is, which one it was, but it changes the OBS screen. So this is kind of an area where you might expect a lot of sell pressure to come in, not only because 47, but because now that the daily candle is red, right? Let's look at the daily candle real quick. Daily candle has gone red, back towards that swing low. It's looking like, sellers are getting in position again, getting in position early. We've seen a big increase in open interest, right? So here's Binance, and this is what you would want to see for a trap. I don't think this is going to end up, I don't know if this is going to end up as a trap right now. So you have a big increase in open interest. You have a ton of volume, negative delta in this case, a lot of aggressive sellers. Big size in terms of the ticket size for these. So it's not like these are small sellers. So these are big players selling. A trap would be, well, think about it like this. If you just entered into that $9 million short and we're trading, $50 above your entry now, well, you're probably, sweating a little bit. So yeah, it doesn't really look good. So I don't know if, this could be a trap in the making, but I would need to see that we trade. I don't even know if it would be worth taking because we're still kind of within the bulk of today's activity. So a cleaner setup, and just to give you an idea how I think, a cleaner setup for me for this kind of trap would be, let's say we did just break below this low, and then you're looking at, okay, below today's low, an area where you'd see a good amount of participation come into the market. Let's see, we saw that volume come in down here, and then I have, I guess, a better setup to take if we start trading back above within what was originally the daily range before we made the new low, back within today's value, maybe back above today's open. Then we have all of that volume that came in down here. Open interest is up, good case to be made for new business in the market. And then, yeah, maybe we have some sort of W forming. Maybe we're looking at another balanced day, and those daily targets, though, are right back on the table, right? So, today's point of control, today's value area high, there's just a little bit more, I guess, confidence you could have in that situation in that case. Versus it's like, where am I really defining this position here? Or what am I defining as a bullish setup or bullish trigger? For me, it just can't be, oh, we just sold and now we're back above the daily open. I mean, it could be, but the market just looks a little heavy right now. And no, not for nothing. I mean, it's looking better right now. So we're looking at the S&P E-mini, right? So index futures. So S&P was looking heavier this morning. I mean, we have a nice little W so far. Back at today's value area high. Nice profile if you're going to make a case for a move up. If we're starting to trade back above something like 45.30. B profile, built a base, common sort of structure in the S&P. Move up, come back, grab all that liquidity, move up, do the same thing over and over again, build a base, continue upward. So heaviness in the S&P never helps BTC. So, and I would be more confident in BTC in the short term if we started seeing, some more aggressiveness in the S&P. Obviously, where markets closed right now, cash session is closed, but futures market's still open. So, well, right now might be a little break time. Yeah. Anyway, any questions, guys? One other thing that I don't think would help is Sol correcting, so Solana correcting, which I'm not calling for correction at all yet, but if we start to see downside movement in Sol, so some larger pullback, I think your kind of bellwether or prized horse at this point, weakness in that, at that point, it's like, okay, so who is still strong? At least when you have BTC moving sideways, Solana, moving, ripping up still, like, after yesterday's correction, today's movement, Solana still moving up until recently, or yesterday, for example. You still have a case to be made, okay, so market's really not that worried. But if we start seeing profit taking on some of these pairs like Solana, deeper pullbacks, and we've had an AVAX right now, but Luna, for example, with Luna and AVAX, Luna's further away from this level, right? But prior range, oh, that's the, okay, hold on. Luna's a distance away, pretty distance away from the next major level. Cleared it nicely, but if we're looking at a pullback right now, besides 26, under 26, you're looking all the way back down to 22. Solana, very far away from any kind of, arguably any kind of significant level, around the 80s, right? And I think that if you start to see some type of correction in those, in your sort of leaders, that'd be troubling. We know how candles like this they do sort of create the, to some degree do sort of manifest or create the activity that unfolds, because a lot of this market is on confidence, right? And what shows up on the daily or the weekly chart, it's hard to sort of shake that, right? When you're looking at a daily chart and you see that candle, it's like, well, where have you ever been that you've seen that candle? And it's supposed to be interpreted as a bullish structure, right? It would be interpreted as kind of one of the more bearish candles that you could have. Push upward, but completely rejected. Even though, candle close is 24-hour market, it's kind of an arbitrary thing that we focus on, but it is what we focus on, right? If we look at monthly candles for BTC, I don't really care too much about monthly candles for BTC. They only become significant if we're if we're looking at, God, I mean, it's a candle that's on average 30 days long, right? We have 2 hours left in this one, so okay. I don't know if this is where it is right now. I could glean too much from it, right? If we were having a monthly close through a low or a monthly close through the high, then I would say, just like I said just recently, the market makes decisions based on these things. But kind of in the middle here, it's like, I don't know, I wouldn't want to be, you have enough evidence on the weekly and the daily to sort of come to some at least semi-informed decisions. So I don't know if that Binance short just closed out, right? Did I miss something? Because we have a 20, no, actually, never mind. I'm looking at Binance, and on average, the order sizes in those increments is larger. But it looks like we're having a good amount of buying volume come in now after selling into the lows. So maybe someone is trying to press, right? Sort of, oh, we've had, a ton of volume come in, 211 million contracts traded, 59 million negative delta. Is that all you got at these lows kind of thing? So, and ETH still holding this level. ETH is now, oh, ETH is making a move, huh? Yeah, ETH with the recovery, super choppy, right? Pain in the ass. For anyone who's just day trading this, it's great, because day trading ETH when it's moving is awesome. Yeah, just flip-flopping on funding. FTX buying big. Oh, looking at ETH. Well, we'll see. As long as this level holds, still got a green light. Does anyone have any other questions? Probably going to wrap it up soon. What are we, like... hour and 15 minutes into this. There's a large seller a couple hours ago on Coinbase. It's kind of walking price down. You still have a decent size at 35. But again, it's this obvious large number like that. You're going to see, well in advance, you'll see a lot of orders placed at that level. So always offered. Yeah, at these levels, though, you have to remember 5 million is not the same as it was at $10,000. With ETH, I think you're looking at 38 or excuse me. I think 38 is reasonable. So just zoom out a little bit. Looking right at if I had like a 6-hour setting, it'd be just the perfect resolution. But I'll put this on and just move it. This high right here. A little bit higher. 38 stands out as kind of a level that I would want to start selling, but I think that you could expect some sort of stickiness when you start getting back into, I could see it's not on the screen. Sorry, one sec. Start getting back into where bulk of that volume was up there. So, I think that be good to start managing around 38 just because it's, that's just my kind of, I want to front run it a little bit. It depends, right? So the thing about NFTs is there was a lot of value creation, but the ETH that went into NFTs, for example, you bought something for 100 ETH. It's not, I don't know how much that ETH is going to, it's the same, that ETH being sold, you're selling a piece of artwork, someone pays you 100 ETH, you're just going to go long derivatives with that, like it's ETH already, right? So that money could come into, other pairs, but yeah, I don't know. I'm not focusing too much on any orders propping up the market. I don't focus too much on the resting liquidity, the stuff that is obvious and hangs out there. So if we just zoom out and looked at like 46.5, 46, it's obviously 46.8. You can just see where the dark areas are, where there's a lot of volume, a lot of resting liquidity. I don't, that's an advertisement. I don't know if I could glean too much from that by trying to determine if they're propping the market up or not. Like I said with ETH, if after this structure right here, for example, we've had a pretty cleanly defined structure. So move up, right? Sort of high grab, rotate back down, test the top side of this previous structure. This is kind of if you're looking at this on the profile, before it filled out, it was a nice trending profile, and actually in a trending market you would normally look for some kind of activity or pullback to that first gap as a level to get re-involved. In a fast moving market you're not expecting it to hang out within there, all right? But nevertheless, if ETH is going to be able to trade back above where a bulk of the day's activity has occurred, around above of, value area high is a good example. Even though day's developing, I don't want to pay too much focus on a value area high earlier in the day, but the day is, because it is developing, but we're like, what do we have? How many hours left in the day right now? 2 hours left in the day. It's pretty, I think it's pretty set in stone where the value area high is. So it's just a range, right? Right now it's the value area high, but it's a very clean range. If we're trading above, 34.50, I don't think you're looking at a second fake out at the high. Right? I think you're looking at a substantial expansion upward. But it's kind of right in that sweet spot. Right? It's sitting right on top of the level, which is sort of the determining level for major traders to, major breakout, excuse me. I don't know a lot about NFTs. I own a bunch of NFTs, but I have not been vocal about them. I didn't get in punks. I didn't get in rocks. I'm pissed off about that. But I own a bunch of NFTs that I bought because I liked. And I by no means bought them or minted them because I thought that they're going to turn into much. And a couple of the NFTs I like are valued at a lot. They have high floors, but ain't nobody fucking buying them. It's the best way I could put it. I have one that's like, the floor is so high, but there's nobody bid. It's like, I'm not selling it for that amount. So I don't really know too much about specific NFTs though. So show you, I'm not familiar with. Looking at the Delta footprint on FTX, doesn't that kind of look like someone is beginning some buy? Hold on. I mean, if I look at FTX right now, so that, looking at, hold on, let me move the screen real quick. I mean, these are 15-minute groupings, and I have the tape next to them so I could see sort of real-time activity. I go on and off. The market's moving slow. I won't use sort of a rotation or volatility-based rotation or volume-based rotation. I'll use time if it's moving slow. And then just have the tape next to it. The footprint is good if I'm just looking at the tape because at least it's sort of like a historical record of what took place if I missed something. It's like, did I miss, a $10 million order like that just came through? I'll just look at the footprint. It's going to be registered there. Initially, yeah, this was a big drop in open interest. You probably just stopped out some longs. Okay, that's fine, right? I can't really say. So that's new business. That's old business closing. It looks like. This looks like it's some new business opening in the form of shorts. Right, so you have a slight increase in open interest. This is a 15-minute candle, though. Obviously, if I broke it down to a lower time frame, you could see sort of for tick almost what caused the change in open interest. Ideally, with trap setups, you want to see a big increase in new business. Increase in open interest. These look like new shorts opening right here on FTX. And if you're new short opening and we're sitting below where you got involved, I mean, you're pretty happy, right? The thing about it is, though, now we're just looking at Binance. Jesus. You're getting some selling into the low that really isn't being reciprocated. Not reciprocated, but we're not seeing it rewarded. You're getting selling into the low, and we're almost about to trade back above where that 9 million K came in about 30 minutes ago, right? 9 million K, 9 million BTC. So, I don't know. Is this a trap setting up? I mean, that's a decent little low in the making. At least in the short term. I mean, if you get something like this, trading above that pivot, it's kind of like, all right, so whoever got involved here is kind of screwed, right? So whoever's in that wick, not too happy anymore if they sold. Right? But, We'll see. I think I'm going to wrap it up, though, guys. Gonna wrap it up. It's been about an hour and a half. Market is kind of starting to move right now, so I want to start to getting some positions tagged on the low time frames. That jam in the background that's on repeat is actually Smooth with Any Groove. So and it's by Flow Fills Music. Yeah, I think that's going to cover it. Everyone have a fantastic evening. I don't think there's anything else that I missed that I wanted to go over. Just a recap, daily close coming up. It would be great if we close above this level. You're sort of giving permission for people to get involved and feel safer about it, because at that point you do have a change in the structure. It's not premature before close. This kind of structure, though, you often do get sort of a trap set up. If the breakout, so just consider it like this, if this level is so significant, right? If this level has been so significant, then the break above it should be very significant as well, right? We want to see that the market really gets excited about this, and that it means a lot to the participants. Sellers closing out, longs getting involved, higher prices, the market continuously following this up. I guess the best way to put it is you want to see the market get excited about this, right? You want it to move fast. The longer we hang out here, the less confident I become, right? And then BTC, just a little rounding top at a very obvious level that sellers would want to get involved in. Consolidating at resistance when we are at the highs, but now, we're favoring the lows, obviously. And the market does change, so this could change, but not necessarily the best place to get involved if you're long. But we are very close to an area that you could have a lot of confidence getting involved at on the long side, right? Meaning the invalidation to any kind of bearish thesis is really close, especially after you've had multiple efforts towards breaking the lows that have been sort of, wait, am I stuck in, move them? What's going on? Oh, sorry guys, one sec. I can't grab the drawing tool. It's right over OBS. It's fucking stupid. All right. I was going to change the size of the ink. It doesn't matter. After having this activity at these lows, if we're at above 50K at that point, yeah, that's obvious. It's like, yeah, if we're above 50K, if we're above 100K, it's bullish. So, all right, guys, that'll be it. Everyone have a great evening. Until next time. Be sure to check out our partners at Phemex.trade. And if you're interested in learning more about this stuff, go to www.blockroots.com.